Welcome back. You're watching The Money Show on ET Now. This is time for our Meet Your Fund Manager segment. The fund that we're going to be talking about today is the Nippon India Growth Fund. Pretty decent returns, especially compared to the benchmarks in the last 1 year. This fund managed to deliver a neat 12%, not bad at all. Quite an alpha delivered by the fund. 5 years, 7.8%, and the 10-year return picture is 11.65%. It is what you could call a small cap fund. So some of the top, the top composition as well of this fund is from names like Varun Beverages, which does have a big dominant place in the fund. 4.79% of the AUM is invested in Varun Beverages, and we know the stock price has actually run up quite a bit. You have Cholamandalam as well, again a great performer. AU Small Finance, ABFRL, SRF as well, City Union Bank, Vardhman Textiles, Bharat Forge, Tata Power and Tata Global. These are among the top, stocks that are there. And it's finance and banks that are among the top sectoral exposures for the Nippon India Growth Fund. Finance is 14.3%, whereas banking is 11.9%, followed by consumer non-durables, pharma, as well as software. So the question, of course, is, should you invest in this fund, the Nippon India Growth Fund? We'll help you make a decision in your Meet Your Fund Manager segment. Manish Gunwani, who manages this fund and is also the CIO of Equity Investments with Nippon India Mutual Funds, joins us now. Mr. Gunwani, thank you so much for joining in. To start off with, why don't you start by telling our viewers a bit about the fund, the key theme, where does the Nippon India Growth Fund invest?
So Nippon India Growth Fund is a mid-cap fund. So a lot of our investments are in mid-caps. Now, when we look at mid-caps, we generally follow a growth at reasonable price kind of style. And we're trying to look for companies which obviously can become large caps. So one of the things we do is basically look at sectors which we think over 5-10 years will grow faster than nominal GDP. And generally, I think these sectors fall into 4 verticals, which is financials, consumer discretionary, healthcare, and technology. So if you look at the fund, a lot of our core positions are focused on these sectors. If you look at the portfolio construction, while the overall number of stocks is quite high, essentially we try to keep the top 40 positions at somewhere around 75 to 80% of the fund. And out of these 40 positions, around 30 are, as I said, structural growth stories, which we think will grow faster than nominal GDP. Rest are value / contrarian / special situations where we feel that there is deep value, and within 1 or 2 years, there will be some trigger to unlock that value. So that is broadly the construct of the fund.
Okay, I stand corrected, investing in mid caps as opposed to small caps. Mr. Gunwani, we've seen a nice bout of outperformance by the fund compared to the benchmarks, and that too at a time when mid caps have not done very well. So what exactly has aided Nippon India Growth Fund in you?
So as I said, we've tried to look at structural growth stocks, and in spaces like chemicals, financials, hospitals, a lot of the choices we've made have worked out. We've tried to avoid both value traps on one side and stocks which are expensive but don't have long-term growth. We've tried to avoid stocks which are disrupted by either technology or regulation, etc. We've tried to avoid stocks where management quality has been questionable. We've generally stayed away from housing related financials, which over the last 2 years that segment has seen a lot of stress. So it's a combination of all this that has helped us create this alpha.
Well, yeah, that's always, tricky, really, picking these stocks. So that's what I want to ask you, how do you pick and choose the stocks from the mid-cap space that feature in the fund? Because, like you mentioned, you stay away from sketchy managements, etc. But the fact is that we've seen surprise cases pop up. So how do you screen, the stocks? What's the filtering process, if you could call it that?
So as I said, one of the basic things we see is that is this sector likely to grow faster than nominal GDP, and we tend to focus our core positions in sectors where as India grows and Indian customer premiumizes and technology becomes more important to the economy, which sectors are likely to outgrow versus some of the other sectors which tend to grow less than GDP. So one is that is a core belief. The other, of course, is that when we look at mid-cap companies, I think management quality matters a lot. In the same sector, we have seen that a good management delivers and creates enormous wealth, whereas a suboptimal management, the stock tends to stay flat for many years. So we've seen that a lot of times. So we obviously try to spend a lot of effort in terms of evaluating managements. And finally, I think there needs to be a bit of a valuation discipline. Although with growth stocks getting re-rated in this environment, I must say that is a bit of a challenge, because a lot of the returns in growth stocks today are coming through PE expansion rather than earnings growth. But to whatever extent you try to maintain a bit of valuation discipline and sell when the valuations get frothy, and when good companies are trading due to some disturbance or temporary problems, when they're trading at a valuation which is attractive, you try to load on to them.
Okay, Mr. Gunwani, I would like to attain some more knowledge from you, especially when it comes to mutual fund strategizing, because we've seen mid caps and small caps really rally in terms of inflows as well. The popularity of mid cap funds and small cap funds has increased. So, do you think investors should increase their SIPs perhaps in mid cap funds like yours?
Yeah, I think so. Well, mid caps have outperformed Nifty in last 2-3 months, but I still think the price and value correction we saw for 2 years, 2018 and 2019 calendar years, opened up an opportunity where over next 1 to 2 years we felt mid caps will outperform the large caps. And even today, I think one is because of this correction, but also because I think the composition of the different segments, because what tends to happen with the large caps is that it has become very defensive, in the sense that sectors like FMCG, IT, etc. have very high weight, whereas mid caps, the operating and financial leverage to growth coming back is quite high. And generally, my view is that global growth, after having gone through a tough phase last 2 years, of course, due to this virus thing, it probably is a bit uncertain in the short term. But I do think that as this calendar year goes by, we should see global growth revive a bit. I think domestic growth should also revive, because we are already seeing financial conditions improve a lot. Credit spreads are going down, banks are cutting deposit rates, lending rates. So I think from a very low base, both global and domestic economies should pick up. And the constitution of the mid-cap space is such that there are more cyclical elements to the index, and that's why I think over next 1 2 years mid-caps make more sense.
Okay, now again, getting back to your fund, you've generated nice alpha for your unit holders, and usually investors have that past return bias. So what sort of expectations should investors, have from the Nippon India Growth Fund going forward?
So, see, the mid-cap index is very fragmented. So, we are not very benchmark centric, but we do look at sector composition of the benchmark, and we don't take extreme macro bets in terms of making the sector skew very, very high. So, what we tell investors is over medium to long term, we try to create about, let's say, a 4 to 6% kind of alpha over the mid-cap index. That is our attempt, which we've been doing for last 2 3 years, and I think that's the return expectation one should have from the fund.
Okay, great. Thanks so much, Mr. Gunwani, for joining us and breaking down the Nippon India Growth Fund for our viewers. Folks, I hope this will help you take a decision on whether you'd like to invest in the units of the fund. We will take a very short break, but when we return in our Spend with TMS segment, we are going to get you the best of the best from the Auto Expo 2020 and expert opinions on which one are actually worth the buck. Stay tuned.